Welcome back to another episode of the News Roundup with Prop News Time. Here we sit down with key opinion leaders to discuss the latest events and occurrences in real estate in India and across the globe. Joining me today is Mr. Balaji Rao and Mr. Abhay Rao. We'll be talking about the launch of new IPOs and how the Thane market is developing. Today, I would like to start with talking about ANAROC's report on Thane. It's an interesting topic. It talks about how Thane has performed extremely well in the last couple of years. It's outpaced other localities in the MMR region in terms of its supply, of a price appreciation. So I'd like to begin with talking about the supply in Thane. According to the report, in the last 5 years, we've seen over 65,000 units enter the market. Most of Thane's supply is currently grade A supply. What are your thoughts on this?
The way it's not surprising to see Thane emerge as the hottest spot in MMR for a lot of reasons, in my opinion. One is if you look at MMR area, it's actually a sort of a Y.
Okay.
And the axis is BKC. So you have the western suburbs, you have the eastern suburbs, and then you have the whole island city sitting. There is New Bombay, which is there. But if you look, the y-axis is what has always been well infrastructured and connected.
Okay.
Because because of Western Railway and the Central Railway coming in and then going down beyond BKC into Churchgate or VT. So Thane, if you see the development which has gone north naturally because you couldn't go south, you couldn't go west, so we went north.
Right.
On the western suburbs, we have gone up all the way to Dahisar today, where the BMC limit stops. And is very well developed.
Right.
And then on the eastern suburbs, we have gone all the way to Mulund. Also, again, very well developed.
Right.
There's no problem. The next stop is Thane, the Thane district, which is very big. Earlier on, it was a industrial area where all the industries used to be there.
Yeah.
Slowly, naturally, because of the value of the land and its closer proximity to the density of population, most of the industries have moved away.
Right.
And they have either become commercial or residential or retail. So that's how it develops, a typical megapolis. So Thane was very well suited to throw up also the land supply because you were converting industrial area into residential or commercial. And you were converting brownfield into, again, greenfield.
Right.
So there was a whole rejuvenation of Thane as a suburb. And with good urban planning, it's well connected.
Yes.
So it was bound to be the next hotspot, where you could have, because any urbanization requires a lot of people migrating into the city.
Absolutely.
So all the new migrants earlier had gone to, say, the Lokhandwala, Oshiwara area. Then they had gone to the Powai area. So now most of them go into the Thane area.
Yes.
So it's an ideal fit for a middle class person coming into the city, seeking employment, getting into business, entrepreneurship. That area well connected, well developed, well infrastructured, throwing up supply. So it's absolutely has no surprise that it is one of the hottest spots in the MMR area.
Right.
Yeah, see, Thane, the property prices were always considered highly attractive for the last, say, 15, 20 years. And it was always discussed as an opportunity or a place to consider. But it's only in the last, say, 5, 6 years when the infrastructure has taken a major boost and there's more planning being done, more things happening there, that the appreciation and value is started being seen as well.
Right.
However, Thane is one of those places again which is not, while real estate is now coming up, has not had so much investor money as much as people who want to live there who bought. Now they've, over the last few years, they've started attracting more and more people, investor money as well as people who just want to purchase a house as a capital investment. And flip it after a few years and stuff like that. But traditionally, most of the people who were staying there were actually people who were working there and who had their entire life around there. Now, as that slowly changes, the entire Thane itself is going to start looking quite different, you know?
Right.
So it's not just commercial and residential, it's going to be the overall, everyone, your retail, everyone, prices will go up all throughout, you know, whether it's a shop or a mall or a house or an office, everything will start looking up now. Especially because while earlier, like I said, was always in a prime, good location, they had the space, they still have a lot more open and green spaces there, but there was not that much infrastructure and connectivity. Now that that has improved, hopefully more and more things will open up out there, you know, as well as people who are in the city also. So many of them who've shifted that side, having preferred staying there now that they see, oh yes, now we have the same amenities there that are available in the central and western suburbs. So then why do we come back, you know, when we can enjoy a slightly better lifestyle out there?
Well, I mean, Thane has got its lakes, it's got its parks, it's got its good townships, good supply, which I mentioned, the grade A supply. It's also got a lot of 1 and 2 BHK apartments. That seems to be, majority of its supply is between the 1 and 2 BHK range, which is what's most popular right now for as a starter home for people that are looking to begin their life, young families. And if I compare it to other localities, other extended suburbs, if we think of how Borivali was, say, 10, 15 years ago, if you look at how infrastructure has grown over the last 10 years, it doesn't take you too much. The time difference from, say, getting from a Borivali to a Churchgate or a Borivali to a BKC, the difference from Thane to BKC or Thane to Borivali isn't too bad.
See, that is because if you look at a latitude, Thane is in the same latitude as your Borivali.
Right.
Okay. So it's naturally the distance between a Borivali and Churchgate and Thane and VT would be comparable.
Right.
Okay. So the question is, it is closer, it is well connected. And for any suburb, any locality, micro market to really shoot up, it needs connectivity and infrastructure.
Correct.
And then it needs a good gentry.
Yes.
So in a new area, the gentry is usually of migrant professionals.
Okay.
Okay. Because in an old area, you can say this is one particular locality with one particular community or anything. But in a new area, it's all the migrants who pour in.
Correct.
And the migrants who pour in will generally be professionals,
yes,
white collar workers who are all coming. And it'll start as a starter home. That's why you have the 1 BHK and 2 BHK.
Correct.
Because there's new couples, maybe one kid, maybe two kids. And that's how they all start. And slowly as they become more prosperous, maybe they'll come in or maybe they'll go into bigger houses in Thane itself.
Right.
The social infrastructure of Thane has also undergone a lot of changes.
Absolutely.
Excellent hospitals, educational institutions, retail malls. So there's entertainment. So all that completely brings together a complete package.
Right.
Okay. But the biggest point which is to be seen is whether supply is there.
Right.
Demand comes also when supply is also there.
Correct.
So the supply in Thane is there. You understand? It's not very easy to find supply in Ghatkopar, for example.
Correct.
Okay. Or in a Vadala or Shivri and all that. The supply in Thane is there because there were large factories, large mills which can easily be redesigned and, retrofitted. So you have a lot of supply.
Yeah.
So when the supply is there and the demand is there, that's when the affordability is well matched.
Right.
If the supply is very less and the demand is very high, like in a Bandra or something, then naturally the price shoots up.
Correct.
Correct? So I think Thane fits in very well. Maybe as the supply dries up again, the prices will go up. And that indicates why the price rise. Because as the supply slowly starts drying up, then your price rise will start because the demand continues for some time. And then the price will rise until we then get to the next stop.
Right. Also, in places like this, you'll have to see the price rise will also not be uniform. It will probably be more for, say, maybe the premium segment or something like that, affordable segment which has more supply, and then where the supply and demand are well matched, the price may not have risen that much. But say in a slightly more premium segment out there, which the supply is only now starting to come up. It was not something that was in high demand or in high supply there earlier. But the thing is, once gentry starts moving in, they don't only want affordable housing. There will be people within there, the managers who work in those IT companies, the C-suite guys, and all, who might want slightly more premium housing, even in Thane. So that, of course, there was a major demand supply mismatch again in the last few years, causes that price to increase. But as premium also starts becoming a part of the Thane real estate scene, then the prices will start to go up more uniformly.
So to reiterate, basically Thane is still very attractive, very affordable because we've got great supply. As supply goes down, demand stays steady or rises. We might see it becoming.
That is why you're seeing slowly the price rise.
Correct.
Because it also has to be supported slowly by economic infrastructure. You know, Thane's economic infrastructure is not just Thane, but it goes for Airoli.
Yeah.
It might slip into the BMC areas like where Mulund or Ghatkopar. So there is a bit of economic infrastructure which is growing on the eastern suburbs. So that will be interesting to see whether that will be sustained or it will be self-sustaining for Thane's growth.
Another interesting point in the report was that there are key infrastructure projects worth 59,000 crores that have been announced and currently in progress in Thane. So there's a lot happening. Some of the notable projects include the Thane Borivali Tunnel, you have the Thane Navi Mumbai Elevated Corridor, you have the Kolshed Jetty, and of course you have the 4 metro lines that are coming up, which will be key connectors to the rest of the MMR region. Now, most of them, the metro lines are scheduled to be completed over the next 2 years, 2027. By then, everything should be ready. How do you see, as these projects get completed, how do you see this area transforming?
See, whenever you put in infrastructure and the projects do get completed, as they will be, maybe a bit delayed here and there, it completely metamorphosizes the whole area.
Right.
Because it suddenly brings people closer to the other parts of the city. It suddenly gives them a better quality of life. Okay. So these are all going to be even more positive factors that will make Thane prices rise.
Right.
You know, because the demand will start.
Absolutely. Yeah.
Okay. So somebody now looking at Vasai Virar or Mira Road, Bhayandar, Naigaon will suddenly say, hey, Thane looks better. Right. So why don't we go that side rather than be on this side? So it's always a basis of infrastructure. And the way we are looking at Mumbai, to just digress a little, I think people are focusing more on the Thane area. We are focusing more on New Bombay. We are going to focus more on the airport which is coming up by mile, which is a whole new development.
Correct.
And then we are going to focus even further down. There's a third Navi Mumbai going to come up. So these which are coming up are more on the eastern side, if you can see, from the northeast to the southeast. And maybe the western suburb growth, which at one time we thought will keep taking off up to Boisar or Danu and all that, might get stunted.
And might go more east.
And might stop at Vasai Virar. And this might go more towards the east.
Okay.
You understand?
Right.
Because even by way of economic infrastructure, whether it is commercial or industrial, it's all more towards the east.
Right.
So either you will have something which goes towards Pune,
right,
correct? Or you will have something which is going towards Thane, Kalyan, Dombivli, Bhivandi, that area, which is the literally northeast.
Yes.
So you're going in the northeast, southeast direction, Bombay. Yeah. You understand? So, and that whole Mumbai, Pune will become one continuum, as I keep thinking.
Yeah.
So there will be less pressure or less demand maybe on the extended western suburbs.
All right.
As a fallout.
See, even within Thane, as you mentioned, there are different infrastructure projects that the government is putting in those 56,000 crores into. And now each of them will have a completely different impact within that place. And this is something we will get to see now. Okay. So now when you're talking about the Borivali Thane tunnel, now that is going to allow more people to come from Borivali Kandivali to come towards Thane. So there will be a lot more of the retail, mall, restaurants, cafes, bars. That will get a lot more exposure and people coming in suddenly.
Correct.
Similarly, the metros will attract a lot more of the office crowd.
Right.
So suddenly your IT hubs and offices that have opened up out there will be able to attract people from wherever the metro lines are connected to.
Right.
So each infrastructure project as well will give birth to a different part within Thane and a different segment of real estate within Thane. And that is what one has to then focus on as a developer in that area or someone investing in that area to see, hey, where will you get the most bang for your buck? So if you're buying into residential, you might want to go towards the townships and places closer to the schools, colleges, stuff like that. If you're going into the affordable, you'll stick towards your houses and towards your offices and stuff. But same way, if you're wanting to invest, like I said, in a mall, in a shop, or in a cafe, or a restaurant, that kind of thing, then you will see where your infrastructure projects are actually taking shape, and you will accordingly build up the area like that. So Thane being so new, we will get to see this happen now.
I mean, it's interesting. It was largely an industrial area, and you see that now moving towards a Bhiwandi, Kalyan, and this becoming perhaps more residential, more.
It's always been like that in any megapolis, as I call it.
Right.
As the metropolis expands, industries are pushed out naturally.
Right.
And the first ones which are shut down and pushed out are the polluting industries.
Yes.
You want clean tech.
Correct.
So naturally, it becomes more of a service-oriented IT parks, life sciences, biotech park. It won't be industry anymore.
Right.
So that's what's happening in and around Mumbai also. Because the industries will be pushed, and even in Pune, it will be pushed out. So the Pimpri Chinchwad area, which was always a industrial area, will remain industrial maybe.
Yes.
Correct.
Or they might also be pushed out.
Yeah.
But it'll be interesting to see because the whole triangle of Mumbai, Nashik and Pune is the real golden triangle which is developing. And now with the Mumbai-Nagpur expressway also open, it'll also throw up another industrial growth corridor slowly. So infrastructure does bring a lot of growth and prosperity, as Abhay said, not only in those micro markets where the stations are and where it is being served, but also in the overall area. So I feel these are signs of good things to come for Thane as well as for the rest of the metropolis.
This month, we've seen a bunch of flexible workspace companies announcing plans for an IPO. We've had Executive Center India, IndiCube Spaces, SmartWorks, even WeWork India recently got its approval from SEBI. My first question is, what is this indicative of?
See, I think the industry of what we talk about as co-working spaces has slowly come of age, the scale. So there are quite a few companies with quite a few desks and workstations available who are realizing that they need more capital to expand because this industry is here to stay.
Right.
That's for sure.
Yeah.
Because it gives you flexi space. It helps you to, when you're in the incubation stage, it helps you. When you're in the growth stage, it helps you because it gives you a lot of flexibility without having to worry about real estate and infrastructure because they're giving it to you. Sure, it might be twice as expensive as you making your own office.
Yes.
Okay, but you're paying that because it's always going to be an operational expense rather than a capital expense.
Right.
So you don't mind paying it.
Yes.
So this has really taken the commercial segment or office sector by storm.
Okay.
Okay, so somebody coming into this country, somebody expanding rapidly, suddenly wants 100 more seats. He might not get immediately a place. So he takes 100 seats first in a co-working space.
Correct.
And then when he sees that that contract is more permanent, he might slowly translate himself into this thing.
Understood.
So if the demand for this segment increases, then naturally it needs capital for the supply.
Right.
And for the capital needs is why these people are tapping the capital markets.
Right.
Now, for an investor to be sure which one will do well and which one will not do well from his point of view, from the stakeholders' point of view, they have to see that the operator is in a position where his vacancy is the least,
Right.
where he's being able to maintain the standards,
Yeah.
keep on being flexible, where his vacancy is the least. That person will naturally run away with the prize. He will have the podium finish.
Right.
Because in any industry, ultimately, it'll be three people who will make it big and the rest will slowly fall off.
Yeah.
So to bet on who will the top three will be, I'm not going to name them, but this is the way you have to take a call. Are these really going to be in the long run in the top three?
Right.
Are they having a podium finish?
Right.
Because the rest of them, if you bet on, they might not yield that return which you're thinking.
Understood.
And to figure out how they're doing it is not just the size at which they are now, but how efficiently they're managing it.
Okay.
Because in commercial, whether it is just an office segment or whether it is the co-working space segment, one of the main things to worry about is not the rental. Everybody will put the rental as market rental, but vacancy.
Understood.
Vacancy kills you.
Understood.
Vacancy is the poison pill that can kill you.
Right.
So there are buildings where it's 50% vacant, suppose.
Right.
Your economics will go for a toss.
Right.
So basically, see, commercial real estate for a long time has been trying to find different avenues to raise, not just raise money, but also allow retail investors to take part in commercial real estate and be a part of that. Because it being such an expensive investment or a large investment for most people. So there were your REITs that had come out and stuff that were giving you an opportunity. There are your partial investments, your joint investments, and all of those, your fractional ownership, all those kind of tools that have come out. But with the concept of co-working spaces and flexible working space, they didn't just, for them, it's a little different. They were not just into commercial. They looked at themselves as a commercial and hospitality hybrid kind of a thing.
Right.
Yeah. So even what they created was one was for the people, for regular folks and more people to have opportunities to work, set up their own offices, give that a shot and all of that. And that has obviously done well. They've been growing, they've been getting returns of 21% over the last few years. The industry has been growing, which is why they feel yes, now we are in a position to get into an IPO and stuff like that. But even when it comes to raising money, the fact that they are doing it via an IPO is so telling in a way, because it basically just like the building itself was made to be accessible to more people. So I don't have to be a bank owner or a factory owner, a big office owner to set up an office. I can be a startup also and set up, or someone who moved to a new city and set up a small office. So the same way I feel even when it comes to their finances and raising money and IPOs, for them it's just part of what those companies believe in.
The ethos
is the same. You're taking it from the people, you're for the people, so why not be financed also by the people, right? Why not give them also an opportunity to be part of this 21% growth that you're expecting? They're expecting to raise not a small amount, right? They're expecting to raise close to 7,000 crores in the next 2 years on just flexi working space in India, which means that it's also an opportunity for people to be part of, to not just invest and work there, but also, like you said, just invest in those stocks and IPOs and see if they can be part of the growth story on the commercial sector. But otherwise, commercial real estate is one of those few places where the retail guy has always missed out.
Right. Okay.
They've never really had an opportunity there. Now they will have an opportunity there. And what an opportunity, the way I see it.
Yeah.
And yes, maybe there will be a few bigger players who will run away with it and the smaller ones will struggle. But I feel this is a far more structured way, like I said, because they've done something in between hospitality and commercial. So yes, whether they will need long-term deals and all of that, but they're not going to be so beholden to that banker and that one CEO and the owner of this company being best friends. So that guy will rent out his office space. He's not reliant on that anymore. He can, instead of that one banker, have 100 smaller guys come and take the space. So the whole thing has changed. So which is why it's not so much just about how many months you've rented out the space for, how many square feet, but vacancy literally you're talking about. Now vacancy is something you only discuss otherwise in terms of hotels or restaurants. You don't talk about it in terms of property, real estate. So suddenly these guys have changed commercial real estate to that extent. And I think it's interesting. It'll be fun to see what comes or how this industry grows, because it is definitely going to be part of the future.
Right. My question was more on the lines of, when does a company decide to raise money from the public? What is that usually indicative of?
See, any organization, to go back to the basics, how do you raise money? Any organization which starts is usually you raise money from yourself, from family and friends. That's called bootstrapped capital. That means it is all very close-knit, the capital. After it grows a little, we bring in angel investors. They come in the earliest. Okay. After it grows further, you get in venture capital, who will come in with Series A, Series B, whatever it is, that sort of a capital. When it goes even bigger, they decide to go public. So there is a sort of a natural progression in this. So it's not completely random or not thought of, but it goes through its cycles. So you're a bootstrapped, then you go to angel investors, then we go to venture capitalists, and then finally we will go to private equity also, and then maybe we will go into the IPO segment.
Correct.
So it's a whole chain which takes place as we go through, based on the capital requirement, because as you expand, your capital is required more and more.
Correct.
Even if you're borrowing, there's a debt equity ratio to maintain. So you need more capital. So if you need more capital and I'm not able to provide for it as an entrepreneur or as a promoter, then I have to bring in people. No? Whether it's angel or venture or private equity or finally public. That's how it is.
And the thing is, once you've started the institutional money, as everyone is realizing, there always has to be an out. So yes, in some cases, the companies have grown big enough to the point where they're thinking, okay, now I want to raise money from the public and expand to 10 more cities and open up in 20 more locations and stuff like that. On the other hand, some of these, many players will find that just because they have institutional investment, whether they are ready or not, they're going to be forced and pushed into finding an out for those guys. Because that VC player who's come in will want an out as well. He's not going to be waiting for you for 20 years to get your footing and get a feel of the market and then do it. He's not your partner that way. He's just an investing partner and he wants an out. And so once the whole process begins, then your only way out is the next stage.
Understood.
Yeah. So it's kind of like that.
Thank you so much for joining us.
You're welcome.
Thank you.
That's a wrap for today. Thank you so much for tuning in to the News Roundup with Prop News Time. Do share your thoughts and feedback in the comment section below. If there's something you'd like to hear us talk about, let us know and we'll take it up next time. Please follow us on our social media handles and hit the bell icon for regular notifications. Until next time, thank you.